Hey, it's Roger here at the BFN. Today, we're going to be talking to you guys a little bit about the situation that has been created, how it's been created, the players that are involved, and more importantly, the opportunity that you, the audience, can have based on these huge moves with the WallStreetBets group and Wall Street, hedge funds, institutions, celebrities. But before we get into all of that, if you're not winning, you're definitely not watching. So subscribe, like, comment, turn on your alerts so you're in the know, because it's about to go down. Good day, good evening, good afternoon. This is Roger Chowdhury signing in here at the BFN, the Business Financial Network. And wow, this week has been a transformational week for a lot of fundamental technical analysts that are working in hedge funds, working at institutional banks, working in different trading groups. It was one of those weeks that it really reminds you that we're in times that are ever changing, completely uncertain, and your goal and our goal here is to help you get more effective and build confidence and trading confidence and intellectual properties that help you navigate these insane times. And, a lot of what's happened in this week between the supposed WallStreetBets group and Goliath, being Melvin Capital, to give you guys a bit of a breakdown, let's check it out here. Elon Musk tweets about GME because Melvin Capital shorted Tesla for years, a story about revenge trading. Elon has battled shorts for almost a decade. We all remember when he complained that shorting should be illegal and when he released Short the Shorts when he finally defeated them. But guess who used to brag about shorting Tesla? Gabe Plotkin from Bloomberg. Plotkin described Melvin as a very human-intensive place. We have a lot of analysts. We require a lot of them. The team has modeled more than 500 companies in significant detail, while a data science group reads into trends. He added the firm has an intense focus on the short side, with about 70% of the profits in Melvin's first year coming from bearish bets. Plotkin expressed skepticism about mall real estate investment trusts as well as the electric car maker Tesla Inc. So guys, in essence here, what this article is reflecting is this article's talking about what's happening in the market. Elon has been basically shorted by Melvin in the past to the tune of many millions of dollars. And companies like Melvin and hedge funds like Melvin exist all over the world in various different exchanges. And there's different functions in the market. The market's made as a zero-sum game. The one thing that I think the market did not enjoy is the market did not enjoy having retail buyers, meaning the public, determine what was going to happen here. But it's okay if it's the other way around. But let's not take my, supposed opinion here. Let's not take, the world's filled with opinions. There's a sea of opinions, and opinions are like assholes. Everyone has one, right? So who cares about my opinion? Let's check out, more importantly, really wealthy and smart millionaire has to say about this GameStop trade. Let's roll it.
Can see their stocks rise in this magnitude, and all of that is just fine? That there's nothing wrong with the integrity of the system if that is occurring?
The lack of integrity in the system is the precursor that caused GameStop to be sold short 136%, and for people to try to pile on and destroy a company in front of our eyes. That to me feels wrong. That feels pretty un-American, if you ask me. I think GameStop is a reasonable business. You know, I think what they do is reasonable. And so the fact that they shouldn't be allowed to exist because all of a sudden, like, we decide that they should be obliterated into the ground.
Well, they should be allowed to exist. They should be allowed to exist at whatever their stock should be valued at based on what their earnings are. And the stock was like
the free market
$17, $18 not that long ago.
Who says that? Who says that? Do you want to make the same argument about Tesla? It's gone 10x in a few months. You don't know what it's worth. Let's be honest. Okay?
You don't think that Tesla's growth prospects?
Scott, I have my own model for the company. I'm allowed to underwrite however I want to own it. Everybody that bought that stock is also underwriting how they want to own it. And the point is, just because you're wrong doesn't mean you get to change the rules, especially when you were wrong, you got bailed out the last time. That's not fair.
Yeah, but it doesn't mean that these investors who were short the stock were necessarily wrong. I mean, I still haven't heard you tell me what the fundamental case is for GameStop at $350 or AMC theaters, which have been closed for months and months and months, is worth what the stock's trading at now, or any number of these things, the way that they're trading. There's no fundamental reason why they're there. They're trading because there's this momentum cohort behind it, whether it's on Reddit or Robinhood or wherever else.
But Scott, why is that all of a sudden so wrong to you, this kind of momentum trading? Because, for example, if you look under the hood on every quant strategy, organized, quantitative, strategic hedge funds on Wall Street, those things are all momentum shops. They trade day over day, massively levered, small swings. So basically what you're saying is, hey, if retail runs a momentum play to squeeze a short, that's wrong. But hey, if Renaissance Technologies and somebody else does it, that's okay. That's what you're saying. You may not know that that's what you're saying, but that's what you're saying. And to me, that feels very unfair.
No. What I'm saying is someone's going to get screwed. Okay, someone's going to get screwed, and it's going to be It's going to be a retail investor who gets screwed because they think that this is the way the game works. That this is the new Wall Street. They're new to this game. Maybe they haven't been in the game that long. Not everybody, not trying to say that in any way, shape, or form. But somebody's going to get hurt. I'm not talking about the billionaire with the big house in the Hamptons. I'm talking about the person who thinks this is cool, fun, and an exciting way to spend their time.
I'm not taking away that there's an element of that, but you're really discounting how smart so many of these people are. Okay? And all I would encourage you to do is spend a little time in these forums, go into the Discord server, and you're not going to hear a bunch of bros just sloshing around. You're going to hear a bunch of really, really smart people talking about things in fundamental ways.
Chamath, don't tell me that yesterday AMC Entertainment was a $5 stock, and today it's up 170%, and that's justified. Don't tell me that some of these names are justified to being where they are.
Scott, it's one company in one moment of time. What I'm saying is
there's like 10 companies, 15 companies, 20 companies.
You're broadly sweeping with a broad brush that says these guys don't know what they're doing and they don't deserve to do what they are doing. And what I'm telling you is there is a small part of momentum, there is a part that's fundamental analysis, and then there's a part that's just sticking it to the man. I'm not taking you away from that. But the reality is it's all allowed in a free market. And all of a sudden, if you start to gate decisions by individual people, all you're going to do is systematically lock in institutional ways of making money for institutional clients. And I don't think that's the solution. If you want to go and address the solution, fix how risk-taking happens at the institutional level, fix the precondition, fix the ability for these stocks to be so massively shorted in the first place, change the business model of funds so that they're not forced to be these small net, highly levered funds, change the leverage ratios. Those are all institutional decisions. But don't all of a sudden look at a short squeeze where money is being made by retail and all of a sudden say, hey, they could and may be the bag holder in the future, so let's make sure that they can never...
Well said, well said. As you can see, Chamath, along with, I'm sure, a lot of other celebrities, Elon including, I heard Mark Cuban today have something to say about it also. I believe they have a pretty interesting bone to pick. And that bone is one of which is really intriguing because I think a lot of Wall Street got pretty pissed off that these guys at supposedly WallStreetBets were, betting against the trend. And really, in essence, let's look into this SEC law that's created here since 2017 that addresses exactly what these guys did by promoting GameStop. Okay, so this is from November 1st, 2017. Investor alert, celebrity endorsements. The SEC's Office of Investor Education and Advocacy is warning investors not to make investment decisions based solely on celebrity endorsements. Celebrities from movie stars to professional athletes can be found on TV, radio, and social media endorsing a wide variety of products and services, sometimes even including investment opportunities. But a celebrity endorsement does not mean that an investment is legitimate or that it is appropriate for all investors. It's never a good idea to make an investment decision just because someone famous says a product or service is a good investment. Let's think about that statement for a second. So I guess all those really famous people that are on those really popular newscast shows don't count? Any rate, celebrities like anyone else can be lured into participating even unknowingly in a fraudulent scheme. Also, celebrities are sometimes linked to products or services without their consent, so the celebrity may not even have endorsed that investment. Even if the celebrity endorsement and the investment opportunity are genuine, the investment may not be a good one for you. Before investing, always do your research, including these three steps. Check out the background, including registration, license status, or if anyone recommending or selling an investment using the search tool on investor.gov. Learn about the company's finances, organization, business prospects by carefully reading any prospectus and the company's latest financial reports, which may be available through the SEC's EDGAR database, or in Canada, the SEDAR's database. And consider the investment's potential costs, fees, risks, and benefits in light of your own investment goals, risk tolerance, investment horizon, net worth, existing investments, assets, debt, and tax considerations. They forgot to say the current market conditions. Never make an investment decision solely based on a celebrity endorsement or the other information you receive through social media, investment newsletters, online advertisements, email, investment research websites, to internet chat rooms, direct mail, newspapers, magazines, television, or radio. Well, ladies and gentlemen, just to tell you, Dragon's Den is a show. You watch it on TV. They're giving you investment ideas. So is Shark Tank. Also, investment research websites. What is Yahoo Finance? So, these are all things that you, the viewer, I will leave you with. And thank you very much for watching today. We strongly suggest that if you're not winning, then you're not watching. So, subscribe, smash like, comment, and turn on alerts so you're in the know. And when all these things that are being seen and being heard, you're one of the first people to get in the know. Thank you very much for watching. God bless. This is Roger Chowdhury signing off for the BFM.
Bye.